Joined now by Daniel Tarullo. He served on the Federal Reserve Board amid the aftermath of the 2008 financial crisis. He's also served as a White House advisor, and he's currently a professor at Harvard Law School. Professor Tarullo, thank you for spending a few minutes with us. Let me just start with this larger question here, which is, could this have been prevented, and if so, how?
Well, I'm sure, Chuck, that it could have been better than it was. I don't have any question about that. And as I've said over the last few days, I think at the very least there was a significant supervisory failure here on the part of the Federal Reserve. When a bank quadruples in size to more than $200 billion in assets in the space of 4 years, that should be a warning signal to supervisors that growth may be going too fast. Risk management systems will not keep up with it. And in this case, Chuck, it was a little unusual because the problem was not on the asset side. The problem was on the liability side of the balance sheet, all those uninsured deposits that you've been talking about.
Yeah.
So I think at the very least, we had a supervisory problem. With respect to the legislation, the issue that you've just been talking about, I don't think that there were direct connections between the legislative changes and Silicon Valley Bank, but that legislation was built on an unwise premise. And that unwise premise was banks of less than $250 billion do not pose systemic problems in the United States. And as we graphically saw this past weekend, that's just not true. Though, as a group, those banks account for about half of the lending in commercial real estate and residential mortgages. And so together, they do need to be regulated, not as tightly as a Citi or a JP Morgan, but they need to be looked at more closely than the legislation suggested.
I mean, it does feel like the message that the federal government has said is that we're no longer are banks too big to fail, they're too medium to fail. I mean, at this point, are we going to have to create a system that insures all deposits at any bank, period?
That is the big question, isn't it? And I was struck by the fact that Representative Waters, the ranking member of the House Financial Services Committee, has actually put that on the table. Of course, if you do that, then you have to acknowledge that all of a sudden the FDIC is guaranteeing a lot more. And so it would either have to raise significantly the insurance premium that it charges, or you'd have to have some tighter regulation. But Chuck, I think there's another issue here which has been a little bit underappreciated because everybody is understandably trying to diagnose what went wrong last week. And that is the business model of these mid-sized banks. You know, they're really kind of caught in a squeeze. They don't have the local connections that a community bank has, but they also don't have the economies of scale and the diversification that the biggest banks have. And as you know, when in a digital age, economies of scale become more and more and more important. And so I think what you're seeing is they're turning to uninsured deposits as a source of funding in a period in which they are looking for their own niche. And that, I think, is going to be a challenge going forward. And we're going to have to ask the question, are we going to insure all these deposits? And if so, what does that mean for regulation?
So that actually takes you, it sounds like what you're saying is that these banks, it's not the size, it's the diversification. Because, look, I was reading something today that indicated that some of these mid-sized banks have too many liabilities in the digital asset world, and that this was potentially contagious. And then while the digital asset world isn't big enough to take down the economy, well, it could be big enough to take down some banks.
Yeah, so it's good to step back a second. What were the three characteristics of Silicon Valley that produced a toxic outcome? First, as you and your correspondents have been discussing, they had all those uninsured deposits. 85 to 90% of their deposits were uninsured, meaning that they would run as soon as Twitter told them to. Second were the Treasury, their portfolio of treasuries, which by the Fed's recent regulations, they were not required to mark to market, meaning that there was a lot of unrealized loss there, which became apparent last week. And the third thing is what you just alluded to. It's a bank whose business was highly concentrated in a particular sector of the economy, which right now is not doing so well, which is to say tech. And you could say the same about crypto. This has happened to banks that provide a lot of credit for the energy industry when oil prices are down in the past.
Right.
So when you have that kind of concentration, it does increase the risks. I should say, by the way, that the federal banking regulators have been trying to limit how much exposure and involvement the insured depository institutions have to crypto.
Right.
They've been getting a lot of grief for that,
yeah.
but I suspect that the last few days is going to vindicate their position.
No, that's for sure. Very quickly, if you were on that board of governors, would you pause interest rate hikes, or would you just keep on keeping on just at a lower rate?
Well, look, I think here's an interesting perspective to add what Eamon said a little bit earlier. Financial conditions are going to tighten. There's going to be less lending. Banks are going to pull back a little bit. And of course, that's exactly what happens when interest rates are increased. So if I were back on the Fed, I would be asking myself, has this crisis, bad as it is, actually done some of our work for us? And does it allow us to pause here and see how much tightening there's been? I wouldn't pause because of fears of the financial system as a whole, but I might for macroeconomic reasons.
You may have. I have a feeling you just foreshadowed the explanation for whatever if nothing does get raised. Daniel Tarullo, really appreciate you coming on. I learned a lot in our short conversation. I'm sure our viewers did too.
Thank you.
Thank you very much.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.